We are pioneers in two things. One,
that is Anmol Jaggi, founder of Gensol Engineering, which builds solar power assets,
which power thousands and thousands of homes or industries. Gensol till now has built about 1 gigawatt of assets. In 12 years, we built a gigawatt, and now in the next 18 months, we will build a gigawatt. If I have to project something like 2047, which is 23 years from now, I think we would have built hundreds of gigawatts by then.
Jaggi also runs electric cab hailing company BluSmart Mobility.
I'm very happy that we have inspired a lot of entrepreneurs to actually start similar models like BluSmart, and India will be a much better place if actually all our cars become electric. Anirban, our current fleet is close to about 9,000 vehicles, and we expect that in 5 years we will touch the 1 lakh vehicle mark. We are the tortoise in the race. So tortoise in the race is slow, but will definitely win.
This was Jaggi in a conversation with me in December. You can't miss the confidence and ambition in his voice. And why not? Gensol seemed to be one of the poster boys of India's renewable energy story. It had significant solar infra projects, mostly government contracts in its kitty. It had announced plans for a green hydrogen valley just 3 months before our interview. In just 4 years of listing, the company's share price had seen an unnatural surge of 16x. And most notably, BluSmart was being touted as a potential challenger to incumbent giants Ola and Uber. But in these last 3 months, the Gensol story has almost completely unraveled. What am I talking about? Financial troubles, raised cash reserves, delays in loan payments, alleged falsification of credit history, questionable related party transactions, a massive downgrade of its credit ratings, and an attempted distressed sale of its assets that failed. So, what went so terribly wrong at Gensol? And is it the end of the road for BluSmart? Let's find out. It's Wednesday, the 2nd of April. I'm your host Anirban Chowdhury, and this is the Morning Brief. Now, Gensol Engineering was set up in 2012 as a flagship entity of the Gensol Group. It started as an advisory firm and pivoted to solar engineering in 2017. 2 years later, in October 2019, Gensol listed on the Indian stock exchanges. 2 months after that, Anmol Jaggi set up BluSmart. Now, I've told you that Gensol had an unnaturally positive run for a few years. It was last March 2024 when its spate of problems began. This was when a man called Harishankar Tibrewala, the owner of an investment company called Zenith Multi Trading DMCC, came under the scanner of the Enforcement Directorate due to his alleged ties with the multi-thousand crore Mahadev betting scam. Now, Zenith was a shareholder in Gensol. So, the Enforcement Directorate went ahead and seized those shares. In fact, if you compare the shareholding structure at Gensol between December 2023 and March 2024, you will see that in the latter case, the ED appears as a public shareholder with a 1.37% stake in the company. Gensol obviously denied any connection with Tibrewala, but the market started losing faith in the company. In February 2024, Gensol's shares had touched their peak at 1377 rupees a piece. Next month, they fell 24%. Of course, it was going to get much, much worse. Cut to March 2025, two agencies, ICRA and CARE Ratings, downgraded Gensol's creditworthiness. In fact, ICRA downgraded it to D, which signifies a company either in default or one that is expected to default soon. ICRA said the downgrade happened on the basis of feedback from Gensol's lenders about its ongoing delays in debt servicing. That wasn't all. ICRA also said that documents shared by Gensol about its debt servicing track record were falsified. Fake. Now, interestingly, two of Gensol's biggest lenders that ICRA has listed are public sector companies, Power Finance Corp and Indian Renewable Energy Development Agency, or IREDA. The two entities have lent Gensol a combined amount of over 800 crore rupees. Remember that Gensol's gross debt as of February 2025 was 1,150 crore rupees and net debt about half of that. ICRA also said in its report that as of February 2025, 85% of the company's promoter shares were pledged to its lenders. ICRA's damning report came barely 2 weeks after Jaggi had told investors in a post-earnings call that its debt and share pledges were both going to reduce significantly. Why? Because of a planned deal to sell about 3,000 electric vehicles to a refrigeration company called Refex. Here's Jaggi on that conference call.
So the promoter pledge is in way of two things. One is the share pledge that we have given to Power Finance Corporation and IREDA against the EV lease debt that we have taken. And as you know, we have already signed and we have already deleveraging on the EV lease debt by about 300 crores. That 300 crores of deleverage will also mean that another 300 crores of share pledge will get removed from us. So that is going to be a good significant share pledge removal once the Refex transaction gets concluded. Bulk of our debt comes from the EV vehicles which is there. Meanwhile, we will also try to do similar kind of transaction like Refex in the coming quarters, which will mean that one, we will get deleveraged more, and two, the promoter pledge will continue to fall.
The Refex deal did not happen. In response to an emailed questionnaire from the Morning Brief, Gensol admitted delays in debt servicing and said that it's making best possible efforts to repay. It, however, clarified that the loans aren't non-performing assets or NPAs yet, which is something that a senior official at IREDA has also confirmed to us. Still, the markets have been severely punishing its stock. Just in March, that's last month, 66% of Gensol's market cap was wiped out. Its price to earnings ratio is now a sixth of what it used to be last year. And why not? If the ICRA report is to be believed, there are other holes as well in the company's claims of robust financial health. So for this episode, I went through hours and hours of Jaggi's post-earnings conference calls with analysts and investors. Every quarter, he's spoken about the company's strong cash flows. And I mean quarter.
We have had strong cash flows.
After quarter.
You will see much better operating cash flow for quarter one.
After quarter.
I think we are generating enough amount of cash flow from operations.
After quarter.
We are not negative on cash flow, we are positive on cash flow.
But the ICRA report assessed its liquidity position as poor and said its cash flow will remain negative this financial year. That's FY26. There are other concerns too. Here's Nitin Mangal, founder of Trudens Capital Advisors, a forensic research and advisory firm.
I would say, so in terms of the red flags, there are a few things which I have noticed while seeing the financial statement of the company. So the first thing is that the receivable growth has surpassed the growth in top line of the company. And ideally, being the forensic analyst, we use this as a thumb rule that if the growth in receivable and unbilled revenue is higher than the revenue growth, then there's a chances that company may have booked the aggressive revenue recognition policy. So they have aggressively booked the revenues. That is the point one what I could gather at, and because company was not generating a sufficient cash flow over the long term in last 5 years, let's say. And again, the another perplexing thing is that for 2024, they do have around 190 odd crore rupees of cash lying into the current account. As a
Which
prudent,
means?
uh, treasury management, the finance team of the company, they'll not keep such huge amount of cash into the current account, whereby they'll not be generating any yield. So even though if you keep it for 1 or 2 days, and you say it's a 4% or 5% yield, it will give you some decent amount of interest amount, and especially in the situation whereby the company is into cash crunch.
Right.
So this looks quite weird to me, that why they have kept such huge amount of cash into the current account on last day of the financial year.
Now, let's analyze the core of the problem. You heard Jaggi saying that the largest chunk of debt is on the books of Gensol's electric vehicle business. Now, Gensol Engineering has a subsidiary called Gensol EV Lease Private Limited, which buys electric vehicles and leases them to EV operators. According to reports, its largest customer, which means the entity that leases the largest number of EVs from it, is BluSmart. And here is where things start to get really weird. Now, who owns BluSmart? Anmol, his brother Puneet, and co-founder Puneet Goel hold over a 30% stake in the company. Other shareholders are BP Technology Ventures, Inflection Point Ventures, First Port Capital, and some large family offices. Does Gensol own any shares in BluSmart? No. But for some reason, it has been indirectly investing in bolstering BluSmart's operations through transactions that should be at an arm's length, but according to Nitin, probably aren't.
Gensol must have spent more than 500 crore rupees in the last 3 years to build up the fleet for BluSmart, right? And majority of the expense has been done during 24, whereby they have bought these vehicles of around 352 odd crore. Gensol has to lease back to BluSmart. Why BluSmart has not bought in their own books is again a question, because it is pertaining to EV, so there could be subsidy from the government as well.
Now, in her email response, Gensol spokesperson asserted that Gensol and BluSmart are two different companies with different management structures, auditors, etc. Also, the company has in the past said that it's trying to cut its exposure to BluSmart. Here's Jaggi from a post-earnings conference call in October.
In fact, over the last about 6 months, we have brought down the leasing to BluSmart close to zero. So we have not been, our entire new edition of the book has been towards non-BluSmart customers.
In fact, in the same conference call, Jaggi and Gensol's former CFO, Ankit Jain, said that the company was moving from something called an operating lease to a finance lease structure, which meant that at the end of a lease tenure, the asset would move to the lessee's books. Would that be applicable for all customers, including BluSmart? Was Gensol trying to make itself asset light? That bit is not clear yet. But it seems that's not where the transactions between the two companies end. Nitin said that BluSmart and its 3 subsidiaries have been receiving loans from Gensol.
They do have around 108 or 10 crore rupees of the amount which they have paid to the related party as unsecured loan.
Related party meaning BluSmart or other?
BluSmart. There are 3 subsidiaries of 3 companies of BluSmart group, to whom they have given. Also, some other companies in the Gensol group, to whom they have given the loan. You are into financial trouble. Why would you give unsecured loan to the group companies? So somehow it reflects, and then after that, you defaulted on the interest payment. So it reflects that the liquidity position is not good only at Gensol level, but it is not good at an overall group level. So that is what the entire spiral is coming and haunting them.
In its response, Gensol said that there is no debt to BluSmart except for the leasing of vehicles. It called Nitin's numbers incorrect. Also, Gensol isn't the only one at a high risk of default. BluSmart too has delayed 30 crore rupees of NCD or non-convertible debenture payment. The payment was due on February 3rd. The company clarified to me that the payment has now been cleared, It also said that BluSmart's outstanding debt is now at its lowest at 240 crore rupees. Okay, so then why the delay in payments on such small amounts? Anyway, let's dig a little deeper into BluSmart's business. According to the latest available data, its standalone loss more than halved to 15 crore rupees in FY23, but its consolidated loss more than doubled to 216 crore. In its email, Gensol said, remember, this is Gensol responding for BluSmart, which is supposed to be a separate company. Anyway, Gensol said BluSmart's EBITDA losses have reduced by 16 percentage points. The spokesperson did not give me any absolute numbers for FY25, neither have they been published. But BluSmart's operational performance has dwindled, says my colleague Pranav Mukul.
So essentially, I mean, if we look at BluSmart's business, it's a very small business compared to the other ride-hailing giants in the space, which are, Uber, Ola, and now even Rapido has entered that space. BluSmart has remained sort of constrained to the markets of Delhi, Bombay, and Bangalore. It started operations in Dubai, but now it has had to shut those down. And these essentially have to do with the issues that Gensol is facing, the cash crunch at Gensol, the debt repayment crisis, as we know about it. So BluSmart's the number of rides per day has come down significantly from the peak of 25 to 30,000 rides that it was doing sometime last year. And also there's a leadership crisis that's happening at BluSmart. Senior sort of executives have quit from the firm. We reported about it. Rishabh Sood, who's the CTO, Tushar Garg, who's the chief business officer, he's quit. The CEO of Fleets, Anirban, he's quit as well. This is in addition to several other, slightly less senior executives who've sort of stepped down.
So why is this happening to a company which was thought to be a potential disruptor in the cab hailing space? Here's Deepesh Rathore, a veteran auto expert and founder of Insight EV, a research and advisory firm that covers electric mobility.
I've been a user of BluSmart, and let's get this out first. I think the service was immaculate. It was the best.
Yeah, so I've been told.
Yeah. Saying that, now the EV cab service, unfortunately, sounds very good on paper. Okay, that I'm going to save the cost of petrol. The initial cost is high, but then I'm going to lease the cars, and my operational cost will be low, and my driver can perhaps take longer trips because EVs are also smoother to operate. What happens in actual life is that most of these EVs are, obviously we are in India, so these are what entry level EVs, a Tata Tigor, which gets sold as XLT or any of the other ones that are available in the market. If you're running an EV company like that, an EV cab company like that, you would be resorting to a lot of fast charging. Fast charging messes up the cell balancing in most of these cabs. And, I would say the fleet usage of BluSmart would have been impacted severely. Now, that doesn't affect an Ola or an Uber because they've got nothing to do with cabs. So if one driver's cab is off the grid for maintenance reasons, there are other driver cabs available and it doesn't impact them. But in case of BluSmart, it did impact them.
I believe none of the cabs or cars were on BluSmart's balance sheet per se because it believed in an asset-light model.
Yeah.
So
they are not on BluSmart's balance sheet in terms of the cost, but they are being leased by BluSmart.
So whereas asset is not on its balance sheet, the asset utilization or the lack thereof definitely impacts the business. That's what you're sort of trying to say.
Yes. So it becomes very critical for a company like BluSmart to have a very high level of cab utilization.
So Deepesh, this is a BluSmart problem?
There's an operational issue always. All these cabs being used, be it the Tata Tigor or the Citroen C3, have got a limited range. It's not like a 500-kilometer range. Most of them have an operational range of about 150 to 200 kilometers. After that, you want to be close to the charging station. Okay? Which means that if I am, say, booking a BluSmart and planning to go towards the outskirts of Bangalore, where I am, the BluSmart service is not available. So it's a circle that they draw on the map that this is where the cabs can operate, and that limits their operation. and as a customer choice, that limits them.
Meanwhile, I'll complicate things for you a little more. Gensol also has its own EV manufacturing company. In fact, it recently showcased a three-wheeled electric passenger vehicle called Ezio and its cargo variant EasyBot. In an investor call, Jaggi said the company has received 30,000 pre-orders for the cars and that there was excitement and enthusiasm for them in the market. Deepesh does not quite share this enthusiasm.
I've seen that three-wheeled car when it was not a Gensol car. It was developed by a startup, and then Gensol purchased that platform. It's nice on paper, as in, I got two wheels in the front, one in the back, and it's a good alternative between an auto rickshaw and a car. Okay, but the problem is again that if you do not have any place to deploy that car, BluSmart is as good as gone now. What will Gensol do with all the manufacturing? There is no private demand for that car. The whole idea was that we are going to again, make the cars, sell it to a third party, lease them back in BluSmart, and that will roll out a much larger, cab operating service. Okay, but if you do not have a cab operating service now, there is no future for the car really.
So here's what's been happening, right? Gensol has been trying to pair its exposure to BluSmart. It has been trying to sell a large chunk of its electric cars to retire debt. Remember the failed attempt with Reflex that I spoke about? And it's been also trying to expand its vehicle manufacturing business and tie that to its vehicle leasing arm. But everyone on this episode, and even others I spoke to, said that none of this is working out. So, now what? Here's Nitin.
There is no option because they can't sell. They have to raise equity. They can't sell the asset, right?
Exactly.
Because now the company is into a bad shape. So if they go on market and try to sell the asset, the price what they'll be getting is very discounted price, right? So which may not be sufficient enough for them to service the obligations what they have on the debt side as well as on the operating side.
Right.
So what I'm saying that equity is the only option because promoters 85% holding is already pledged with the financial institutions, and
Exactly.
given the fact that the stock price has corrected drastically, so there can be pressure from the lenders as well. So they can liquidate the shares of the promoter as well. So promoter is into a crisis. Whereby they have to. It's very difficult for them to arrange liquidity at their end. So they have to rely on some other equity partners to raise the equity or to raise the fund.
The future for BluSmart appears bleak too. Here's Deepesh.
If you don't own the cabs, okay, which Ola doesn't do, or an Uber doesn't do, or BluSmart doesn't do, okay, BluSmart lease the cab, so you just only have the right to the lease for a certain period of time till you can pay the monthly lease amount. Okay, once you lose that, the capability to service the lease, you are reduced to the level of an Ola or Uber. Now, what is an Ola? It's an aggregator, right? An aggregator is as good as the relationship it has built with its customers. There is no asset there. Okay. So, in one stroke, Ola's valuation, Ola Cab's business valuation has come down from 7 billion at one time to 1.8 billion. And I don't even know if they can easily go public at even that valuation. Okay. Because they piled up a lot of outstanding debt, outstanding losses there. Okay. So similarly with BluSmart, unfortunately, when you are in such a position, now the decision is hardly in your hands. It is then let's say this is going to be a distress sale of Gensol selling the cabs. If each of these cabs would be at about 30 to 40% depreciation, the electric car resale value in India is anyways not great. If you're selling an entire fleet of cars to a company, it would be really very attractive prices for the buyer. So yeah, I said distress sale everywhere. BluSmart would be happy to offload its reputation, relationship, and the access to the cabs to Uber, and that's about it. And they hardly have about I think a 2-3 month window there to do all of this.
Deepesh just referred to a strong market buzz that Uber is trying to buy Gensol's EVs and/or a stake in BluSmart. Gensol has repeatedly denied it, but here's Pranav.
We have reported that Uber has held very early stage discussions. It has sort of scoped out what the assets are with BluSmart, whether there can be a possible acquisition. All those talks are still ongoing. While Anmol Jaggi has denied these developments, these are talks that we were told have been happening. There are BluSmart also runs its own charging network, where it not only charges BluSmart cars, but it also opens it up for third party vehicle owners to come, and so it operates as a commercial service. So there's a large charging network, of course, for a company like Uber. While BluSmart operationally was a much smaller player, like I said earlier, because of it being present only in 3 cities, but it does provide that kind of a heft in Uber wanting to expand its own green services. And of course, all this also signals to a larger consolidation within the ride hailing space, where Uber is also again now facing threat in the four-wheeler space from the likes of Rapido, which are operating on that whole Nammayatri subscription model, which is sort of Rapido has deployed to onboard drivers. So a lot remains to be seen, but interesting times. So hopefully there'd be a lot more to report on this.
Now, Gensol has been trying to do what it can to salvage investor and market sentiment. It has set up an independent committee to investigate the alleged falsification of credit documents. Its promoters recently converted share warrants to equity, and it's obviously in talks with investors either for a distressed sale of assets or equity. But then there are other aspects of its business still that are being questioned. For instance, Gensol's latest annual report shows that apart from BluSmart, it also gave loans and advances worth about 500 crore rupees to an entity called Matrix Gas and Renewables over the course of 2 years. Now, Matrix is another company whose key shareholders are Anmol and Puneet, but not Gensol. Again, Gensol and Matrix, which according to a spokesperson has 74 employees, had together bid for and won a contract to build a green hydrogen valley in Pune. When I asked the Gensol spokesperson about loans and advances to Matrix, she said Gensol had received margin money from Matrix to bid for the Hydrogen Valley project and later returned it. She added that these transactions were done at quote-unquote arm's length. Now, Matrix had filed for an SME IPO listing in 2023 and later withdrew the proposal. And that is when Nitin analyzed the company threadbare. Here's what he said.
So Matrix Gas, I have analyzed the company, when they filed the DRHP for the SME listing. And there was a
2023?
question raised. Yeah, 23. And
Right.
then there was some query raised by the exchange. So just to brief you about Matrix Gas, this is a company which is a sub broker with the IGX, which is Indian Gas Exchange, whereby the gas trades on the platform, and he is just a broker. Right? So there are
Right.
few interesting things which I find out in the company. First thing is that it had around 11 offices at the time, and they only had 12 employees, including the director of the company.
Wow.
Which I don't understand how come somebody is running 11 offices and only 12 employees. You at least need peon or something, someone else helping stuff in the office. So that was perplexing. And later on, they got a contract from NHPC for the hydrogen project, EPC hydrogen project. How come a broker gets a contract for EPC? I don't buy this logic. What was their rationale? How they are doing it? So
Right.
these are the few questions.
I saw a release saying Gensol and Matrix to set up India's first green hydrogen valley. Has it got an approval for the IPO after that?
No, then they withdrawn it, but they were able to raise some, if I remember it correctly, 400 odd crore rupees from the investors, and they were planning to list on main board in 26 or 27.
Okay. But no, sort of, that has not moved, right?
Yeah, so we don't have any news. So they have not filed DRHP as of now.
Got
We don't have TRP on different. But yeah, definitely because now Gensol and BluSmart is in trouble, so the repercussion may also come on the Matrix Gas as well. So the prospect of the IPO may also, get challenged on that front.
So it is a proper, confusing, convoluted financial mess at Gensol around loans, leases, and perhaps many other transactions. Over the course of this episode, we have tried to analyze and answer several questions around the problems, but to me, the biggest question that emanates from this story is this. Gensol's biggest creditors are public sector enterprises, and the loans on which it has delayed payments were government announcements. A large chunk of its EPC contracts are from the government or its enterprises. The Green Hydrogen Valley, for which it won the bid, is an initiative of the Ministry of Science and Technology. The question, therefore, is, should India choose the poster boys of its sustainability and renewable energy story more carefully, more responsibly? We will leave you with that food for thought. That's it for today. You were listening to this episode of The Morning Brief. It was produced by me and Rajas Naik, sound designed by Amrit Reggie. A new episode of The Morning Brief drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. Keep listening. All clips used in this episode belong to their respective owners. Credits are mentioned in the description.